For the avoidance of doubt, The Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Welcome back to the Saturday Sendout from The Simple Side. Opportunities come in frequently, but when it rains gold, put out the bucket, not the thimble. Little quote from Warren Buffett for you this morning, and happy Saturday, simple investors. I'm going to run through some quick updates for everybody, and then we'll get into this week's returns, which again outperformed the S&P 500. I think this is now 4 weeks in a row, so we've broken the pattern of 2 weeks of beating the S&P 500, a week of losing, 2 weeks of beating. We've now outperformed the S&P 500 for 4 weeks in a row. But before we talk about that, I just want to remind you that if you want to get quick, short-form stock updates and daily analysis, / just like general finance news, you can go and check out the daily newsletter I send out. I don't want to make it a part of this newsletter just because if you don't want to be receiving those daily emails, I don't want you to get spammed. But you can go check that newsletter out. It's $1 a month or $10 a year to support that. Most of what I put out is free there, but if you want to support me, it's it's super, super low cost there. And there's a link in the newsletter. So check the newsletter out, thesimpleside.substack.com. You can find the newsletter, find that link, and go get all that done. Also, I want to remind paying subscribers that they have access to a $2,000 giveaway in December. So be on the lookout for that coming your way sometime soon. Also, I just want everybody to know that I am working with a couple of platforms to put together a copy trading and a profit sharing system for paying subscribers. So I should be able to basically create an index for you that you can go invest in, whether that's the flagship fund, the contrarian trades, or this short-term weekly newsletter. And then paying subscribers should be able to go and just basically subscribe to those trading strategies, and they will be able to just copy trade off of those. So that's in the works as well. I'm talking with a couple of different platforms about that. Also, just another announcement that the homepage has been rearranged and revamped, so you can see 3 tabs on there, one for the Saturday Sendouts, which is of course this newsletter, one for the flagship portfolio, and then one for contrarian trades. Also, I'm going to be doing a Q&A podcast at some point and send that out to everybody just to answer any and all questions that people have been emailing to me or that they've sent to me. So if you want to send me a question, you can email me at thesimplesidenews@gmail.com. Or you can click the button in the newsletter that says, let me know by clicking here. If you click that button, you can leave a question for me. All right, let's talk about some past performance real quick. So far, over the past 18 weeks, we have averaged a 1.09% return weekly, which means basically over the course of a year, over 52 weeks, we would be returning 52%, which is just incredible. So let's take a look at what happened last week. So like I said, over the past 18 weeks, we've been beating the S&P 500. We've returned 19.67%, while the SPY has returned 6.14% week to week. Annualized, that means the SPY should return 17.73%, but 19.67% annualized turns into 56.81%. And again, if you're looking at the newsletter, you can see this awesome graph that shows how my portfolio has outperformed the S&P 500. Sitting at $11,967, whereas the SPY investment would be sitting at $10,614. All right, again, we've got a little performance tracker for you here. So last week, we beat the S&P by 1.42%. Over the past 18 weeks, we've outperformed by 13.53%. And annualized, our returns have hit 39.08% higher than the SPY. You can also see the list of stocks that I sent to paying subscribers last week, and the returns are as follows: 8.76%, 5.78%, 2.45%, 2.01%, 1.87%, 1.29%, and negative 0.09% and negative 0.72%. So we've had two stocks, that were above 5% returns just last week. All right, so today's reporting information, we're going to talk about politician trading, we're going to talk about insider trading and executive trading. I'm going to run through this all pretty quick. I've got a wedding that I've got to be to in just a couple of hours, so I want to get this out to you. So I'm going to rush through here. Both the ETFs were up this week, both around 2%. Over the past month, they're both up around 4%. And year to date, the Democrat tracking ETF NANC is up 31.29%, outperforming the SPY, while Cruise is up 20.57%, underperforming the SPY by around 5%. Over the past 30 days, we've seen 20 politicians make 170 trades, investing over $3.38 million. And this is pretty on par for what an average week looks like. This has been another week highlighted by, Marjorie Taylor Greene lighting up the buying section with over 8 buys being initiated on Tuesday alone. But this has been typical of her over the past couple of weeks. All of her purchases remained within the $1,000 to $15,000 range, and none seemed out of the ordinary. We did see Tina Smith, a Democrat out of Minnesota, buy Tactile Systems Tech last Monday and didn't report it until yesterday afternoon. Interestingly enough, the stock jumped over 13% just this week alone, so she definitely capitalized on that. And her investment was between, I think, $100,000 and $500,000. So a massive, massive investment there. And guess what? She performed incredibly well. No wonder the Democrat tracking ETF NANC is doing so well. You can check out the 5 most recent trades by looking at the newsletter, thesimpleside.substack.com. For insider trading, we track an ETF, SURE, ticker symbol is SURE. It was down 0.09% this week, up 2.88% over the past month, and 16.3% year to date. Again, this is underperforming the SPY. Insiders made a few interesting buys this week, and if you've been following this newsletter for a while, then you know that PBF Energy has been a stock that has experienced massive insider buying from the largest family office in Mexico. When we first analyzed the stock, it had a rating of 7.0 out of 10, and currently it's sitting at, I think, a 6.9 out of 10. We've also seen the financial strength drop from an 8 out of 10 to a 6 out of 10, and free cash flow continue to decline. Company financials are in a downturn, and there's been poor results last quarter. However, they did increase their dividend 10%, which leads me to believe the company has a strong future ahead, or at least they think they do. But I don't see this as a buying opportunity for this week, and I have put it on the watch list. Again, you can see the top 5 largest trades from this past week if you go and check out our newsletter. Also, just a reminder, premium subscribers get access to our long-term, mid-term, and short-term portfolio strategies that have all beat the market, and you can join too. We're going to be sending out a Black Friday deal sometime soon, I hope, so be on the lookout for that, but you can also join now. All right, let's talk about executive trading real quick, and then I have got to get going. So total executive ownership this week grew by 155% for the top 5 companies, and the largest increase came from a director at Ohio Valley Bancorp, ticker OVBC. They increased their ownership percentage by 95% at a purchase price of $25.34. The stock now sits at $27.75. I want to highlight OVBC this week. The stock is about 4% undervalued by my model's predictions, but solely based on free cash flow numbers, the stock is undervalued by around 26%. So big disparity there if you're looking at just free cash flow, or if you're looking at how my model predicts things. If you base the value on earnings per share, it says it's undervalued by around 2.67%. So it could be an interesting stock to look at for the long term. And while the stock is sitting 50% below its highest point ever, it does rank a 7.4 out of 10 on my value scale. And the problem is the stock has been overbought for the past couple of weeks, which puts it at the perfect place to dip in the next coming weeks. That being said, I'm not completely sold on the idea of buying the stock for the next week. I'm going to watch list OVBC until it comes up again with better financials and a lower price tag. You can check out the other most recent executive trades in my newsletter, thesimpleside.substack.com. All right, investing for next week is where all of our paying subscribers get to see the buys that we have for next week. These are the buys, again, that have outperformed the stock market by 39% and are expected to return 56 or 54% by the end of the year, or over the course of the next year, I guess. You can go and check those out. Again, I want to remind you that information like this, people usually charge hundreds of dollars a month for, thousands of dollars a month even, and I've been doing all this for $200 annually. The reason it's so cheap is I am also making these investments. So all the opportunities that I've been talking about are things that you get to see as well. All the buys that I've been making, I also invest in, which means I get to capitalize on the returns from those investments and then use the subscription money to increase those returns. And eventually, those paying subscribers will get access to a profit sharing model, like I said. So go and check those out. We've got 1, 2, 3, 4, 5. We got 6 buys for you this week, 3 stocks on the watch list, and a bunch of news stories about everything that is going on in the world. So go and check those out and let me know what you think. We've got some awesome top investment ideas this week, and I hope you enjoy it all. Let me know again. Please reach out to me, thesimplesidenews@gmail.com, or reply to this email, or click that button in the newsletter and send me some questions for the Q&A. And I look forward to seeing you next week.